Is the Bitcoin bubble about to burst? Volatility has become synonymous with cryptocurrencies, and Bitcoin is no exception. The Bitcoin rally, which started in the mid-2020s, continued until mid-2021 as the digital currency gradually climbed from 9,000 to 59,000 level. However, between May and June 2021, the digital coin lost almost 90% of its value, plummeting to around 31,000. In July, the virtual currency made up a sharp recovery and continued rising until it peaked to all-time high of 69,000 in November 2021. Bitcoin has slumped almost 50%, dipping below $36,000 level in January 2022. This amounts to a loss of more than $1 trillion in Bitcoin value. The recurring boom and burst cycles of the cryptocurrency has ignited fears among investors as to whether Bitcoin is a bubble that is about to burst, or is the market just a cooling-off period? There are plenty of plausible arguments that explain in part or in whole the recent rout to Bitcoin's value. Bitcoin slide coincides with fall in global stocks. The recent slump in Bitcoin is a tandem with a slide in global stock markets. The S&P 500 fell roughly 8%, while the Nasdaq index lost around 12% since the start of the year. The correlation between the S&P 500 and Bitcoin's return is growing, which could have put negative pressure on the crypto coin. Investors are selling off their investments in risky assets, such as stocks and cryptocurrencies, to get better returns in government bonds after the Fed turned hawkish. Monetary tightening by the Fed. The monetary tightening by the Fed is likely to sap liquidity from the market, which will turn the investors away from riskier assets to low-risk assets, such as government-issued bonds. Also, the Fed is considering raising interest rates and tapering COVID stimulus to combat surging inflation, which will end access to cheap credit and might slow down retail investors' investments in NFTs and Bitcoins. Institutional investors' interest can lend support. Despite the downfall in Bitcoin price, there has been a significant institutional interest in Bitcoin, which can provide a decent support in difficult circumstances and renew retail investors' trust on the cryptocurrency. Big corporations like Meta Platforms, PayPal, and Shopify are working to adopt cryptocurrencies in their monetary transactions. For example, Meta Platforms is developing its own cryptocurrency called Diem, whereas PayPal and Shopify are developing solutions to accept cryptocurrency payments as a payment method. As per reports, the assets under management, AUM, of crypto hedge funds almost doubled from $2 billion in 2019 to $3.8 billion in 2020, which shows that institutional adoption of Bitcoin is on the rise. Bitcoin is inherently volatile. Bitcoin has a long history of experiencing large drops, and the experienced and loyal Bitcoin enthusiasts are used to it. This is the 8th occasion since 2009 that Bitcoin has lost around 50% or more of its value from its recent record high. While Bitcoin's advocates portray it as an alternative to gold investing and a hedge against inflation, it has apparently failed to retain its value or buying power to provide a hedge against the 4-decade high inflation rate. A single event can trigger a large sell-off, which is a sign of high volatile assets, so Bitcoin traders or investors should be prepared to face wild swings, often over 50% in their positions. Regulatory restrictions on crypto assets. Recently, there has been media reports about the Russian central bank proposing an outright ban on cryptocurrencies, including mining activities. Restrictions regarding crypto promotions are also being proposed by the regulators in the UK, Singapore, and Spain, which is making a negative impact on cryptocurrencies, especially Bitcoin. While Bitcoin is still down 46% from its all-time high of 69,000, it has recovered marginally from its lows and might well recoup all of its losses as it did in earlier cycles. Some analysts believe that corrections of 50% in the Bitcoin market is normal. Analysts claim that the Bitcoin market has overheated and has entered into a correction phase. It appears that Bitcoin has been squeezed by plenty of factors that have crashed it. For example, the Fed's hawkish stance, rising inflation and interest rates, investors' shift to low-risk assets, global stock market slide, and regulatory restrictions on cryptocurrencies in various parts of the world are keeping the crypto coin under pressure. However, with the support of institutional investors and adoption by global companies can lend Bitcoin the much-needed support. You must note that Bitcoin is the most popular and most traded cryptocurrency, and its value cannot just vanish, as it has intrinsic value that has many practical and innovative applications.